Mark, let's talk about tax issues for dividend investors. What are some issues that keep coming up from your point of view?
So when I prepare tax returns, I always compare last year's dividends to the current year dividends, and I often find a variance. So I look for three different things. Number one, has that company actually paid a dividend this year? So for economic reasons, the company may not have paid a dividend. Number two, you may have not received your T3 or T5 slip. So that could be problematic. So what you want to do is have a list before tax season starts and make sure you tick off each slip as it comes in. If you're missing, then try and call up the financial institution and get a duplicate receipt. If for some reason the slip comes in after tax season, you want to file a T1 adjustment to make sure you don't have penalties in a future year. The last issue is sort of a strange one, is that I'll often ask clients, well, why did your dividend income from, let's say, IBM fall down? And they'll say, oh, I actually sold the stock. So a lot of time people sell stocks early in the year or just forget about it. So testing your dividend income from one year to the next will reveal potentially that you actually sold a stock that you're not reporting. And if you don't report that capital gain, there could be significant tax issues.
We all understand that through the dividend tax credit in non-registered accounts, dividend income is much more advantageous than interest income. But is there any sort of dramatization you can give to us, just so that people, if faced with a choice of getting bond interest or dividends from stocks, can understand just how big the tax differential is?
Sure. So let's just take the average Canadian who makes about $50,000 according to Statistics Canada.
Right.
So at that level of income, you would pay about 13.5% on an eligible dividend versus 31.5% on interest income or salary. At the high rate, those numbers changed to about 29.5% and 46.5%.
Wow, dramatic. Okay.
Yep.
Consider the dividend, everyone. Thanks, Mark.
You're welcome.